Hi there, welcome to kneppyinvests. When I'm looking to take a position in a company, I have these buy signals that help me decide when to take that position. And by far, my favorite buy signal is when a company's share price breaks out when that company releases positive news to the market. Now, not all news or positive news will lead to a breakout. So I'm looking for specific types of positive news, and those specific types are financial related. For instance, trading updates. So when a company revises their guidance to the market and it's positive, that will be the trigger for a re-rating in the share price usually. Conversely, when the company revises their guidance downwards, that can see a share price of a company take a massive hit. I've seen companies' share price fall 30-40% when a company revises their guidance downwards. Now, over the past few weeks, we've seen a plethora of these trading updates being released to the market, which sort of makes sense because we're in the last quarter of the year and companies' management should be getting a better understanding of how they're performing, and they can judge how they're performing against previous guidance. So we've seen some previous guidance being revised upwards, and some companies have revised their guidance downwards. But by far, most companies who are issuing trading updates have revised their guidance upwards. Now, since it is my favorite type of buy signal, I thought I'd do a video featuring 4 companies that have released trading updates to the market. And because quite a few companies have been doing this, I think I'll do some follow-up videos featuring other companies. So the 4 companies I'll be featuring in this video are Reliance World Corporation, Ansell, Sims Metal Management, and the baby of the group, Sequoia Financial Group. Now, all these companies have tailwinds behind them, so I'll talk about that once I go into each company. And for full disclosure purposes, I have taken a position in Sims Metal Management, and I might take a position in a few of the other companies as well. I'm just trying to be a little bit patient before I take a position. So let's get stuck into the first company, which happens to be Ansell. So Ansell has been on the ASX for quite a while, and this is the 10-year monthly chart. So the reason I like to look at a 10-year monthly chart is because you can see the trend in the share price over a long period of time. You can see with Ansell a perfect looking chart for any long-term shareholders because you're going from the bottom left to the top right, an upwards trend here without doubt. You get little periods of time here where the share price does take a hit. You can see in 2015, the share price went from $30 all the way to $15 at the start of 2016. So the share price dropped 50% in about a year, but that would have been an ideal time to buy when the share price got down to $15. Seems like every single time the share price gets towards the 50-month moving average, which is that grey line on the bottom, that's the time to buy. Right now, the share price does look like it's elevated. We've actually gone through a period where the share price has gone exponentially up, or almost exponentially up, and in fact, it's doubled in share price over the past 2 years. So the market cap of Ansell, $5 billion, revenue $2.5 billion, and operational cash flow positive of $393 million. So Ansell, they do provide personal protective equipment, and that sort of area right now has a lot of tailwinds behind them. In fact, I'll get into the reason why they did upgrade their guidance in the next slide, which we'll get to right now. Onto the 6-month daily chart for Ansell. And nothing much has happened over the past 6 months. In fact, if you take the start point and the end point of this period, the share price has just gone sideways at $40. But a lot has happened in the meantime. In fact, the share price of Ansell has been as low as $34. And even looks like there was a double bottom in January and December. And $34 looks like it's a pretty good level of support for Ansell's share price. And then after that, share price got to around $40 a few times, and every single time it got to $40, the share price pulled back. So $40 was a good level of resistance for Ansell's share price. So if the share price of Ansell went above $40 on good volume, that would be a breakout. And we got exactly that when they released their trading update to the market. And the trading update included the magic words, upgrades guidance, one of my 2 favorite words you can find in an announcement. So the market pushed Ansell's share price above $40 and finished the day on April 28 at $40.86. Now, what was included in that trading update was they mentioned there was an increased demand of personal protective equipment. And my thinking right now is whether that increase in demand is a temporary thing or it's going to continue over time. So is it COVID-19 related? So that's a big question I have for Ansell. They also mentioned there was lower travel and marketing spend because we are restricted from traveling around the world. So that actually did help their bottom line. So all that meant was sales growth was for the half year was going to be greater than 24.5%. And we know that because the previous growth rate in sales was 24.5%. And they mentioned sales for this half was going to be greater than last half. And that leads to EPS revised guidance from the company from a range of $1.60 to $1.70 upwards to $1.92 to $2.02. So a fairly large revised guidance there, and that's the reason why the market reacted the way it did. The other thing I've included in this slide is the growth of revenue, operational cash flow, and share price of Ansell over the past 10 years. Now, I'll always look at this when I'm looking at a company financial state, and I want to see or compare revenue and operational cash flow growth to the share price growth. And whenever you see share price growing at a quicker rate than revenue and operational cash flow, you know that there's a bit of marginal multiple expansion, of the company. And multiple expansion just means the market is willing to pay a little bit more of a premium for a company. I prefer to see the opposite. I prefer to see revenue and operational cash flow growing at a quicker rate than share price growth, because that means the share price growth is happening because of financial expansion. And actually, we'll see that when we look at Reliance World Corporation, which is the next company we're going to look at. And so let's get to that company right now. Reliance Worldwide Corporation is a plumbing company. So if you love plumbing, this is probably the company for you. They are one of the worldwide leaders in plumbing supplies. So they listed on the ASX in the middle or the start of 2016. So been on the ASX for about 5 years. So this is their 5-year monthly chart. Market cap of 3.9 billion, but a fair bit of revenue, 1.2 billion, and they are operational cash flow positive by 252 million. So everything looking pretty good. You do see a bit of swings and shifts in sentiment with Reliance Worldwide Corporation share price. You can see share price got to a high of $6 in the middle of 2018, then fell to a low of $2 during the COVID-19 financial panic, and the share price has been recovering since then and is right now around $5. So pretty good financial state of the company. Share price uptrend looks pretty good when you look in the 5-year monthly. Let's talk about the 6-month daily chart for RWC. And actually, I do like this chart, particularly what's been happening over the past 6 weeks. A new developing uptrend looks like has evolved. Now, before that, whenever the share price got to $4.90, which was twice, back in November and then again in February, the share price did pull back. So $4.90 was a level the share price of RWC had to push through for it to be fairly bullish and this uptrend to continue. And it did that when they released their trading update to the market on the 28th of April. Or the 27th of April, I think it was. So fairly bullish with the share price action over the past few days. If the share price moved towards $4.90 in the next few trading days, that would be a low risk buy. So what did this trading update give us? So in this update, they talked about net sales increase over the previous corresponding period, looking at constant currency. And you can see in Americas, net sales increased 39%. And overall for the company, net sales increased 27% constant currency. And the reasons they gave for the increase in net sales was just because of the buoyant demand for plumbing products, and that demand for plumbing products was caused by an increase in renovations throughout the world. So it looks like people, instead of spending money traveling throughout the world, they're spending no money on renovating their houses. And we also saw a freezing event in the United States in February. I think that was largely affected Texas, and that led to a 50% increase in demand for their plumbing products. So it looks like that freezing event was a significant increase or reason for the increase in plumbing supplies in the United States. And because that's more than likely a one-off, that won't happen again in the future. Now, something very important here, they also talked about cost mitigation because they are seeing price of copper and zinc increasing, which could put pressure on their costs in the future. But they mentioned they're going to pass on those increase in costs of zinc and copper to the consumer. Hello, inflation. And the reason I find that interesting is it tells me that RWC has pricing power, which is very important for a company, that they actually can do that. So a lot of companies won't be able to do that. When they see their costs increasing, they won't be able to pass that on to the consumer, and RWC will be able to do that, looks like. So that's a very interesting fact about the increasing of costs, and they are or will be able to pass that on to the consumer. Onto the baby of this group of companies, Sequoia Financial Group. And a Sequoia tree is anything but a baby. It's probably my favorite tree or type of tree in the world. If you've never seen a sequoia, I highly recommend going to California because not only can you see sequoias, you can also see nearby redwoods, massive trees. They are so huge, and until you actually see one in person, you don't actually realize how large a tree can get. Ticker code of Sequoia is SEQ. It's not Southeast Queensland. But when you compare the market cap of Sequoia, 65.6 million, to the revenue and operational cash flow, which are both growing at a nice rate, you can see there is a bit of value with this company. Probably the one negative thing about Sequoia Financial Group is they aren't very highly traded, so they are illiquid, and the share price right now is at an all-time high. Share price did get as low as about 13 or 14 cents during the COVID-19 financial panic. What a great time to buy, and it has tripled since then. But even at these prices, 50 cents, you can't say this company is expensive. So just the only thing against this company is the fact that they are illiquidly traded. When you look at the 6-month daily chart for Sequoia, not much has happened for the last 5 months since November last year. Share price has gone sideways. You can see some wild swings in the share price from day to day, and that's an artifact that this company's shares are illiquidly traded. In fact, if you look at the volume, there are some days where there's no trades at all for this company, and that means if one shareholder wants to sell out, they might have to send the share price down. We saw that towards the end of March. The share price did get as low as 37 cents on one day, simply because maybe one or two shareholders decided they'd lost patience with the company. Share price was going sideways and they wanted to sell. Anyway, when the company released their trading update on the 22nd of April, we saw a massive spike in volume, and that's exactly what I want to see. When a company releases a positive announcement to the market, share price also increased on that day. And in subsequent days, the share price has gone sideways. So that's actually quite good. I probably would have preferred to see a little bit higher volume on those subsequent days, but I can't really complain about that. So why did the market get excited about this announcement? Well, they gave some financial year 21 guidance, and you can see some good growth rates in revenue and EBITDA compared to the previous financial year. So revenue growing from 84.5 million to at least 110 million, and EBITDA going from 4.8 million to at least 8.5, so almost a double in EBITDA. So good financial growth in those metrics, so good growth rates for the company. And when you compare the growth rates of revenue and operational cash flow over the past 3.5 years, growing at 24% per year, compare that to the share price growth of only 14%. That tells me that there is a lot more room for the share price to grow from here on in. So that's another reason why Sequoia Financial Group is attractive to me at these prices. And the last company I want to talk about is Sims Metal Management. Not really a company that's been on my radar at all over the past 15 years until recently. And the main reason it got onto my radar was because I was listening to a podcast a few months ago. Now, I think it was Planet Money. Now, I was talking to this scrap metal guy in the United States, and he was talking about how all the scrap metal he was taking to recycling centres were willing to pay him a really high amount for the scrap metal, and he had never seen it being like this, or the market being like this. So I was thinking, what companies are into recycling on the ASX? And Sims Metal is one of those companies. So this company is about recycling and electronics recovery. So that's the first thing that got me interested in Sims Metal. Then I looked at the chart. Look, the daily chart over the past year looks really exciting. And then they released a trading update. So this is their 15-year monthly chart, and nothing to be excited when you look at the long term. In fact, the share price high for Sims Metal was reached back in 2008 when the share price got to $42. And ever since then, the share price has been dropping. But if you look at the monthly chart, over the past year or so, we can see a developing uptrend just by looking at the monthly chart. So market cap of Sims Metal is $3.2 billion. And when you look at the revenue and operational cash flow, revenue of $4.7 billion and operational cash flow $118 million. Not a lot of margins in this sort of business. So let's get to the next slide. And when you see the next slide and the chart, you'll see why I did get another bit of excitement around this company. So this is the 6-month daily chart, and this is the best sort of chart you want to see as a shareholder. Share price going from the bottom left to the top right. In fact, during the 6 months, the share price has increased from $9 to about $16 or so. So a beautiful looking chart here. Nothing to complain at all if you were a shareholder during this period. Now, I just wish I knew about this burgeoning recycling market 6 months ago, because I could have got on board at that point in time. So they released their trading update, I think it was the 19th of April, and forecast earnings, and the market really liked it. The share price popped up on higher volume. Share price has retreated, and as it retreated to $16, I decided to take a position in this company because I believe these tailwinds will continue for a little bit more time. But this is definitely not the buy and hold sort of company, because I don't know how long those tailwinds in the recycling market will continue. Now, another reason why this is not a buy and hold company is when you look at the revenue over the past 10 years or so, you can see it going down over time. Not exactly what you want to see. So this is straight from Guru Focus. And this next one is the cash flows from operations going sideways. So not exactly what you want to see in a buy and hold sort of company. So why did the market and why have I got excited about Sims Metal? Well, they released their trading update and forecast earnings, and I'll talk about EBIT. So earnings before interest and taxation, and their forecast for the financial year is between 260 and 310 million. And I went back to one of their presentations and I found this little snippet because I just wanted to compare their forecast to previous years. So in financial year 2019, EBIT was 225 million. In financial year 20, EBIT was negative 239 million, but underlying EBIT for the previous financial year was negative 58. So it has improved substantially, the business or the performance of this business over the past year, all because of this burgeoning, this increase in recycling over the past year or so. I'm not exactly sure why it's happening. Maybe there are some theorists out there who can explain why, and leave that in the comments section. But there's a lot of tailwinds behind Sims Metal right now because of the increase in scrap prices of metals, and so their recycling business is doing wonders right now. So although that ends this video featuring these 4 companies, or those 4 companies, I've already decided what companies I'll feature in the next video. And those companies are Steadfast, McGrath, Mirvac, and BlueScope. So I hope you join me when I do that next video. I'm not sure when I'll complete that. Hopefully, it's definitely going to be within the next week because we're still getting so many companies releasing trading updates. And I want to do as many companies as possible because they're all interesting and they're all potential buys. So that's all I got for this video. If you do have any comments about any companies I've featured in this video or any companies I'll be featuring in future videos, make sure you leave a comment in the comment section. Otherwise, I'm not a financial advisor. So if you do need some financial help for your own circumstances, make sure you seek out someone who is qualified and can speak to your own financial circumstances. That's all for this video. Have a good day. See you later. Bye.